Ticker symbol TSPY or the TAP Alpha SPY Growth and Daily Income ETF, a new to me ETF that I haven't really looked too deeply into, but I have been hearing a ton about as of recently. Might just be the new S&P 500 high income ETF king across all their competitors for several different reasons. I want to dig into this ETF, learn more about its investment strategy, its objective, and why it's become so popular as of recent. Then later on, we're going to compare this ETF to some of the other top high income ETFs that also offer S&P 500 exposure through a high income strategy and see which is the best across everything. All to say that if you're a dividend investor that likes high income generation, safe high income generation at that, make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has already helped countless dividend investors get started with their journey. And my custom dividend tracker, the one I use all the time on my videos, has also helped so many investors stay organized and has actually helped them see their dividend income grow. Well, today I have something even better for you guys. When you click the first link down below in my description and you grab my A to Z dividend investing ebook, today you're not only going to get the ebook, but you're also going to be getting the custom dividend tracker, which you can use to track your own dividend income ongoingly, get direct access to my personal email where you guys can email me any questions regarding dividend investing. You're also going to receive a link to view all of my holdings inside my 7-figure dividend portfolio and see all the positions I add and take away ongoingly. And you're going to get for absolutely free my brand new high yield dividend investing ebook where I show you the power of maximizing some of these high yielding ETFs and teach you everything there is to know about that also. This is going to be your one shot to grab everything inside of one single bundle, but you got to move quick because I'm not going to offer this for long. Now with all that, let's get back into the video. Now again, the name of this ETF is TAP Alpha SPY Growth and Daily Income ETF. And heading right into the fact sheet, it says a fintech powered growth and income ETF designed to capture the growth potential of the S&P 500 with an optimized daily covered call 0 DTE strategy. Now it then says why invest in TSPY. Benchmark participation aims to participate in the S&P 500 growth via SPY. Number 2, high income potential sells daily 0 DTE options with the goal of generating high levels of income. Number 3, enhanced return potential seeks to capture returns that longer dated covered call strategies may sacrifice. And to be honest, sometimes selling shorter duration options does offer a more enhanced income potential. So this sort of strategy in theory could outperform. Then lastly, it says reduce volatility, aims to reduce volatility and account for risk with execution. Now the fund's investment objective, it says it seeks current income while maintaining prospects for capital appreciation. So just like a lot of the other very popular S&P 500 high income ETFs, its first goal is going to be to seek current income, then secondarily capital appreciation. Now this right here is sort of a cool infographic. It says TSPY designed for growth and income in a dynamic market, and it shows that during most market conditions, this ETF, because of its strategy, historically could outperform. It says historically covered call strategies have outperformed their underlying securities in bear, range-bound, and moderate bull markets, but lag during strong bull rallies when securities frequently and sharply exceed their strike prices. We believe that the daily covered call strategy allows for more frequent adjustments, which I agree with, aiming to enhance performance over long-dated approaches. Our use of technology streamlines the selection of daily options, simplifying a complex, time-consuming process and enhancing risk management. Now, this is also something I actually want to touch on. I personally do sell covered calls throughout my portfolio quite often across many of my different holdings, but I was going to say a second ago that I don't sell short duration covered calls because this one single reason: it's very time consuming. If you want to be inside your portfolio constantly rolling, constantly looking into where strike prices are at versus the underlying price, it's very, very time consuming and sort of a headache. So for me personally, with selling covered calls, I always go pretty far out, set it and forget it, and normally works just fine. But for this approach, it is going to be much more time consuming and much more labor intensive. So honestly, the fact that the total expense ratio is 0.77% is very, very fair in my opinion. Now lastly, it says understanding TSPY's innovative strategy. It says growth. TSPY offers direct exposure to the largest and most liquid index tracking ETF in the world, the SPY, for consistent capital appreciation opportunities. Next is its income generation. The advisor's technology identifies the optimal strike price daily, factoring in things like market volatility, historical data, planned market events, and other dynamic parameters. The approach not only increases the potential for consistent additive income generation, but also retains the opportunity for capital appreciation. Next, it says maximize theta time decay by writing call options at the beginning of each trading day that expire that same day. The advisor capitalizes on the rapid time decay of the options. This ensures that the investor harnesses the most value from the risk-appropriate option positions. Theta is a measure of the time decay of an option. That is the rate of change in value of an option's price as it nears the expiration date. Next, it says reduce time risk. The short-term expiration, that is 1 day of the option, minimizes prolonged market exposure. The advisor seeks to reduce the chance for underlying security to make an unfavorable shift into in-the-money option positions, meaning the current price of the underlying security moves above the strike price of the option, in which case the fund could incur a loss. Now lastly, flexibility. As the market conditions change, the advisor will adjust its position daily to realign with the underlying securities price trajectory. This approach offers the best chance to participate in both the underlying securities performance and the simultaneous harvesting of daily option premiums. Now I have to give it to TSPY. So far, this ETF sounds pretty amazing, especially for someone like myself that does want to have sort of unlimited exposure to the S&P 500 in my long-term portfolio, but exposure that includes an option strategy in order to earn around 14% distribution rate, which is what this ETF is offering as of right now. Now, 14% distribution rate is going to be a lot higher than names like JEPI or GPIX or even SPYI, which also offer S&P 500-ish exposure, plus with an option overlay. Now, the way this ETF is generally going to offer a higher distribution rate is because, of course, this ETF is trading a lot more options within the month. Now, this ETF does, of course, pay monthly, and as of recently, we see a 29-cent payout, a 29-cent payout, 28, 28, 28, 27, 29. It looks like on average around 28 cents per share per month, which is around that 14% distribution rate. Now, with any high income ETF, you guys are also probably curious, how in the world are these distributions going to be taxed? It says as the most recent distribution of 29.213 cents per share payable September 3rd, it is anticipated that 100% of such dividend will be return of capital. So this ETF offers S&P 500 exposure. It offers a 14.35% distribution rate. It offers return of capital. It offers a very extensive option strategy, which I like, but I'm honestly too lazy to implement myself. But it gets better. This ETF has not only not decayed whatsoever since inception, although it did drop a lot back in April, but on the max time frame, the ETF is up around 2.94%. Now, there's only one thing left to do, and that's to stack up TSPY next to SPYI, next to GPIX, next to the SPY. And unfortunately for TSPY, it has actually lagged behind SPYI, GPIX, and the SPY by a small amount. But TSPY, especially during certain market conditions, I believe could actually outperform, again, depending on what things are looking like. Now, because I personally don't have any TSPY in my long-term portfolio as of right now, you guys might be interested in asking me, would I add this to my portfolio? Because you guys know I do love high income generation with that S&P 500 exposure. I personally would consider adding some TSPY to my portfolio just because I don't have that many 0 DTE cover call style ETFs in my portfolio as of right now, and at least what I'm seeing so far, this ETF looks pretty bulletproof. But before I go to the question for you guys down below, do you currently hold on any TSPY in your portfolio? What are some things about this ETF that you like, that you dislike? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like in it, subscribe, and I'll see you in the next one. This is going to be your one shot to grab everything inside of one single bundle, but you gotta move quick because I'm not going to offer this for long. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.